Hello to all of you. Will IFGL Refractories give good values in returns as demand for steel revives globally? You're watching Ideas for Profit. I'm Ridhima Bhatnagar. Here's a threadbare analysis. IFGL Refractories, which is a manufacturer of special refractories for the steel industry, that has reported the highest ever sales, EBITDA and profit after tax for December quarter in FY21. IFGL has 8 manufacturing plants in India, China, Europe and even America. Promoters hold 72% stake while institutions hold about 17% stake as on December 31st, 2020. Refractories are inorganic, non-metallic material which can withstand high temperature without undergoing any physical or chemical changes while also remaining in contact with the molten slag, metal as well as gases. A very strong recovery in demand has also now turned our eyes back onto the refractory segment, and for today, for Ideas for Profit, we've picked up IFGL to assess how much value it really holds as a stock for your future investments. Let's get straight to it. Let's talk about the financial performance. A strong demand recovery in all the markets, improved realization and cost optimization efforts has led to a strong growth in revenues as well as profitability. The December quarter, remember, that saw revenues rise by over 30%, while gross profit increased by 40% on a year-on-year basis. Profit after tax, that leapfrogged to 413%. The net cash surplus balance sheet, capex coming on the stream in the next 1 year, along with improved performance by subsidiaries, that should all witness improved earnings trajectory for the company. Now, IFGL is a net cash company for FY19, and as of 30th September 2020, IFGL was having cash equivalent of rupees 236 crores, which is equivalent to 20% of the market capitalization. As on 30th December 2020, the goodwill amounted rupees 146.9 crores, which will be amortized in the next 5 years. Now, this of the goodwill will lead to improvement in return on capital employed. The performance of the overseas subsidiaries has also witnessed a sharp improvement during the December 2020 quarter. The demand in the United States as well as the European market, that continues to show sustainable as well as a positive trend. Now, these foreign subsidiaries are currently operating at anywhere between 50 to 60% of their capacity utilization. So what really has led to this entire recovery that we're talking about? The refractories are used, remember, for metallurgy industry, for flow control, and also the internal linings of furnaces, reactors, and other vessels for holding as well as transporting of metal as well as slag. Now, for producing 1 ton of steel on an average, around 10 to 15 kgs of refractories is required. So, iron and steel industry, that accounts for approximately 71% of the refractories' entire market share. On the back of the higher steel production which we are seeing across the world, the demand for refractories is also likely to witness a much higher demand. As per the World Steel Association, global steel production would witness, remember, a decline of over 2.4% in 2020 due to the ongoing pandemic. That is now likely to see a growth of about 4% in 2021. For the period of January to February 2021, the world crude steel production was up over 6% on a year-on-year basis, while in the month of February, it saw a growth of 4%. Let's talk about the capacity expansion then. IFGL has acquired 10 acres of land in Visakhapatnam in India. This is for the manufacturing of new products, including monolithics and precast shapes. If you talk about the phase 1 of the project, which is costing about 30 crores, that is expected to be completed by June 2021. The phase 2, that will have capex of about 20 crores, is likely to be completed by June 2022. At the Kandla plant, the expansion is already completed in FY20, and further investment of rupees 10 crores will also be completed by September 2021. IFGL also plans to invest rupees 10 crores for normal capex and de-bottlenecking exercise in FY22. Currently, all the above investments have been funded out of their internal accruals. So let's really now also talk about the outlook and valuation. IFGL supplies to some of the most well-reputed global steel companies like Tata Steel, SAIL, Jindal Steel and Power, JSW Steel and other global pairs as well. The risk, of course, ranges from recent increase in prices of raw material like oxides, silicon, aluminium, magnesium, low production of steel, coupled with the company's inability to pass on high raw material prices to the consumer side as well. IFGL has recommended dividend of rupees 2.50 per share in FY20, and we expect higher dividend payout on a buyback thanks to the increased cash surplus. Now, based on a peer comparison that we've done in the market, IFGL is trading at a discount to both Orient as well as Vesuvius India, both on a PE and EBITDA basis, which of course then leaves for a scope for re-rating. Investors with a long-term view can of course accumulate IFGL. That's all that we have from our side. Thanks for watching.